Very well. Liz, thanks very much for joining us.
My pleasure.
As always, appreciate it. Okay, let's go back to your money for a moment, please. We come back down just a little. We were up 140, now we're up 100 points. There's some positive trade news out there, especially vis-a-vis Mexican tariffs, okay? So we're up 103 as we speak. I want to bring in George See., Annandale Capital CEO. George, welcome to the show.
Thank you, Stuart.
You've got a great voice there from Texas.
I appreciate that. Hail Britannia, by the way.
What was that?
Hail Britannia.
Oh, I know. Didn't quite catch that
and
first time.
I'm wearing a Scottish lion in honor of the United Kingdom, with all due apologies to Sir Sean Connery for the United Kingdom. This is a Scottish lion. So.
Should we talk about the market? Because you're the one, I read your stuff, you're the one who says the market looks unhealthy. What's wrong with up 100 points now, 500 points yesterday? What's wrong?
That's a blip. It's been down 6 weeks in a row, and yesterday's rally was manic and the sign of a bipolar market. And I think there's so many things working against the market right now. Investors would be wise to at least be a little wary and be a little more conservative in how they're allocated.
You've got the sad trombones.
I hear that.
Well,
yeah.
You think, look at me, okay? I'm 70 years old. I've got a position in Microsoft. I've made some money. Should I sell?
Not Microsoft. Microsoft's a 10-year hold.
What about our viewers? A lot of them have done pretty well investing in American stocks over the last few years. Should they sell?
They should not sell. They should be buying stocks that pay them a very healthy, generous dividend so they can offset some of the market turbulence we're going to get in the next several years.
You've been watching the show, because that's what I said to an investment manager yesterday. I said, what's wrong with selling out of some of the stocks you've made money on and putting it into dividend-yielding shares? That's your point, isn't it?
Far be it from me to say great minds think alike, but I'm going to say it anyway.
So give me a strong dividend play that you like.
I like AT&T. I like Antero Midstream, which yields 10%, which has a huge infrastructure in the Marcellus Utica shale play.
Wait, say that again. What's the name of it?
It's called Antero Midstream.
Antero Midstream.
It's got a very strong balance sheet. It yields 10%. It's got a huge infrastructure in West Virginia, Pennsylvania, Ohio, the backbone of the Marcellus shale play in the eastern U.S.
10%.
I like Kinder Morgan, which yields 5%. It is incredibly well managed. And if I were an investor, I would be looking at Kraft Heinz here. It's off 65-70% from its all-time high. It yields nearly 6%. It's universally hated, and I like stocks that are universally hated.
But I want safety. If I'm going for a dividend play, I don't want to see that stock fall out of bed.
Their cash flow covers it 2 times.
But go back to AT&T. Sure. I do have a little AT&T. It's paying me about 6% at the moment.
That's correct.
Is it safe? Dead safe?
It is dead safe for the
time. They're loaded
being
up to the gunnels with debt.
The most levered company in the world. So Randall Stephenson has got to pay down that debt, and that's the key thing to watch in terms of keeping it safe.
But my money's safe at 6% yield on AT&T.
Absolutely. That dividend's covered 180%.
Well, now I'm going to have a look at Antero Midstream.
That's correct.
10%.
10% yield.
Stock
raising their dividend. They've raised it 40% this year.
And the stock symbol is?
It's AM. Apple Mary.
All right, George, you bailed yourself out. Thank you very much for joining.
Thank you, Stuart. Good to be here.
Keep that voice louder, because it's pretty good. Thank you very much. Now this, wait for it, legendary baseball player Pete Rose. Despite a successful career,